So Morgan Stanley is expecting a downward trend ahead for stocks. I want to get into that and some other things. So let's jump right in. So let's read the headlines together, guys. Morgan Stanley's Wilson says S&P 500 could drop 26% in months. So not so great. And he's also saying the risk reward for stocks is extremely poor amid hawkish Fed. And that's according to Morgan Stanley. And they're actually saying the 26% downside will be in the first half of this year. A couple of things they're also saying is they're calling sort of the risk to reward at the moment a bit of a death zone. That's literally what they're saying. And they think sort of the estimates that some of Wall Street is thinking in terms of companies, in terms of earnings, to be 10 to 20% too high. So essentially, and this is a quote from them, it's time to head back to base camp. So that means downhill before the next guy down in earnings. And also too, you can see here, guys, that this is a high risk zone. But we're currently in the death zone, and basically this is your risk to reward. This is something I always mention, you guys. You always want to manage your risk, right? So like if you were to be, YOLOing on stocks now, would there be much more upside? It's really quite interesting because they're saying, I said, 26% downside maybe in the first half of this year. That actually coincides with the numbers that I'm getting from the software that I use. You guys can see here. This is Apple. Apple is actually currently, according to them, 20.7% overvalued. That's according to the robots. Also, too, Tesla is 33.5% overvalued. So it's really quite interesting how Morgan Stanley and then the couple reads that I have all are roughly the same. If you take a look at another headline here together, stocks slide on Fed concern as dollar gets a bid, markets wrap. And one of the big stories actually is the treasuries keep going up. And I was looking at the numbers here. Let me just pull this over here. You guys can see this. And this is just literally breaking news. Home Depot says they'll spend $1 billion to give hourly workers a raise. Okay, we'll get into that in a second. Like literally just popping up right now. This is a live show, as you can see. But I want to look at the treasuries. So the 1 year's trading at about 5%, 2 years at 4.669. You can see right here, 10 years at 3.8. And remember, we talked about this before, where the 10-year, if it gets above 4, that's going to be a real key. It's going to be a real lot of downward pressure for stocks. But the 6 month at 5 and the 1 year at 5, I mean, this is sort of like the risk to reward. It's like, well, I could take a chance and say, Tesla, that could have a, say, 33% downside, or I can take a guaranteed 5% in a year. And I think a lot of people will be throwing money into that 5%. I want to jump in this thing real quick, guys. This is, like I said, this is a live show. Home Depot misses on revenue, issues muted outlook. But they said something, it was the other headline, and you guys saw it pop up here. There's nothing in the article, but it's funny. The pop-up was that they're raising wages. So that would be essentially a problem in terms of costs would go up for Home Depot, but you need people to work at your stores in order to do that. So yeah, this is a live show. Let's keep going now. If I get more updates on that, we'll talk about that in the next update. Here's another headline, guys. Bitcoin breaks away from stocks in 50% surge defying macro peril. And the key out of this one, and I want to share with you, is yes, Bitcoin has done a massive movement compared to stocks, 50% upside. But according to this, though, they were saying, and I kind of agree, sort of what I've been seeing around the news as well, is that this is not necessarily institutions jumping in, it's a lot of retail jumping into crypto. And without institutional support, I wouldn't expect it to get back to prior levels. There's just not enough money there in retail. And also, too, you're seeing a lot of sort of short squeezy kind of thing. So I myself, when people ask me, Chris, what do you think about crypto? It's just, I don't think about it. I wouldn't be throwing my money into it. That's just me. I just don't see, I guess you could say like the Morgan Stanley kind of thing. It's in a death zone in terms of risk to reward. I just don't think it's worth the risk, to be really frank. And that's what's going on with that. I'd love to hear your guys' thoughts on that one as well, though. It's interesting, too, though, that Goldman thinks that Chinese equities could get a 24% jump. This has been an interesting one because Goldman, in terms of their call in the bottom of Chinese stocks, was actually correct. We actually talked about that a few months ago. So they were spot on that. Who knows if they're spot on this? For me, just sharing with you guys, yes, you can make money on the Chinese stocks. Yes, you can make money in crypto, same kind of stuff. But you got to manage risk and know what the risks are. So, I think the risk for Chinese stocks essentially is China going to be too close to Russia? Is China going to invade Taiwan one day? And is U.S.-China relations going to go sour? And those are your risks. Also, too, you have will the Chinese government, ever want to just take over or shut down whatever companies that they feel like? So if you're going to be in these things, I would say try to get the Hong Kong shares, or just do ETFs, because it's just so risky, because you could take the wrong bet on a Chinese company and you could lose everything. So just be very careful on that. Yes, there could be a jump, but to be careful. The demographics are changing. However, I think the argument is that the country is opening up and things could look better for them. I was looking at sort of the headlines over at the Wall Street Journal. They're saying here, stock futures fall after Dow S&P 500 posts weekly losses. So, as of now, as of this recording, it looks like stocks may feel some downward pressure this week. There's an interesting thing here as well. You can read the headline. Office landlord defaults are escalating as lenders brace for more distress. This is important because essentially what's going on, and we've talked about this, is that a lot of companies, right, we're moving out of the big cities, or some companies simply just aren't paying the rent, right? They're just defaulting on their leases, et cetera. Like Twitter would be an example. And this is something to be aware of, right? When essentially people either over leverage themselves, right? I mean, because part of over leveraging would say, signing a lease you can't afford, hiring too many employees you can't afford, et cetera. You got to start making cutbacks, and then it starts to have a domino effect. We'll keep an eye on this one. They were saying, though, that the delinquency rate isn't quite crazy high, but it is moving upward. There's another important news story. Also, this is the tech story that's going to be in the Supreme Court. The basic gist of it is, I think they call like Section 230 or something like that, is if you post something on YouTube or on Twitter or on Facebook or something like that, and that post that you put out there encourages someone to, do a terrorist act, something like this, does, say, Google, Facebook, Meta, Twitter, do they bear some responsibility for that? So as the law currently is now, I could, put any number of things out there, say, for example, on YouTube, and someone really couldn't sue YouTube for things on there, because it's not like YouTube created it, but it is on their platform. The Supreme Court will make a ruling on that, and we'll see if things change. This will be a big implications for the tech companies if they say, yes, Google is liable. But I think it's, yes, you guys know this, how I feel about these things. I think there should be some sort of content moderation. Like, for example, let's see, if YouTube allowed lots and lots of videos of, people how to hurt themselves, that kind of stuff. That could be really, really troubling. So Google / YouTube doesn't allow that kind of videos, but they're not necessarily liable for it. However, the Supreme Court could, come down strict on that, and then you'd even have more strict implications. So hopefully you guys understand my point of view, and I'd love to hear your thoughts on that as well. And we'll see what the Supreme Court says. And then the one thing too that is going on. So we know that Biden went to Kyiv. It was like Ukraine, that is. But it was like a surprise visit, and then now Putin's giving a speech like literally live right now. I was just catching the updates. You can read one headline here. Putin accuses West of stoking global war to destroy Russia. There was a prior headline that I just read like 5 minutes ago that was saying Putin's, accusing the West of starting the war, this kind of stuff. I hope this ends. You would think that the Russians would be running out of money or something like that, because essentially, the West can just outspend them. Essentially, this is a war of attrition, but he just keeps it going. And I think sort of the only thing that sort of keeps him in right now is pride. I just don't know. They've lost so much, or I guess it's the, you put so much into it, you might as well keep going kind of thing. But at this point, I just wish someone would just take out Putin and end it. This would, certainly help the world economy considerably, be it food and energy, and also to just, overall loss of life, right? I'm just sharing with you guys. Just thinking ahead in the future, I think when this finally does end, there'll probably be a lot of reconstruction, and I'm sure there'll be a lot of companies that will be involved with the reconstruction of Ukraine. It's not hard to see. I'm just sharing with you that's something that I look at. I feel sorry for the people there. I read, I don't have it pulled up right now, but I also read in Turkey and Syria, I guess they had like another earthquake. It's just a horrible situation right now. So anyway, I just wanted to share all these things with you guys, get your thoughts. Again, Morgan Stanley, I think stocks are got some downward trend. I tend to agree. I think stuff is overvalued. But in the short term, who knows? Nothing moves in a straight line. However, over time, things do trade at fair value. So thanks again for your time. Love to hear your thoughts on these things, and I'll catch you guys in the next video.